Well, one of the things in the world of trading is that no trading system is always right. Nothing's 100% of the time. There's no guarantees. The way you become successful is to be right more than you're wrong and manage your risk. If you do those two primary things, you're going to be successful over long periods of time. Now, when you're trading directionally, one of the things that can happen is the market can go through a transition. So let's say that the market has been trending to the upside, Elliott wave pattern, everything is showing you that the market's moving higher, and then the market goes through a transitional period where it starts to the downside. Well, you might have a couple trades in a row during that transition when the market is changing from trending up to trending down to where you have a few losses. There's going to be losses. We know that. There's going to be account drawdowns. If you look at the equity curve, it doesn't go from lower left to upper right without any sort of bumps in between. There's times when things move to the downside. With Elliott wave options, one of the things that we've done is we've created the two primary strategies in order to manage your overall portfolio. So when you have the impulse strategy, which is trading directionally, and let's just use an example, the market's trending to the upside. Well, the vast majority of the impulse trades are going to be bullish trades following the market trending to the upside. The majority of the Elliott wave patterns are going to be bullish in nature. But let's say the market starts to switch and we're going to move from an uptrending to a downtrending market. Well, then you're going to have likely some of those bullish trades that begin to show losses. But if you have both the impulse and the volatility strategy primarily is going to be the proprietary strangles that we do, meaning that you have a long call and a long put. Well, that means that you have a long put in every single alert. So if the market transitions from being bullish to bearish, all of those strangles have the puts in them. They're all going to start to profit with the market moving to the downside, and it helps you manage the overall risk of your portfolio. And that's specifically why we have those two primary strategies, is overall portfolio management. So that when you go through those transitions, that's usually when that's about the only time that you likely are going to experience 2, 3 maybe losses in a row, is when the market goes through a transition. But if you've got both sides of the market covered like you do with the strangles, then it balances the overall portfolio. It helps for overall portfolio management.